All right, so in this video, I wanted to take a really quick look at GameStop's balance sheet. Since we did get an update on the quarterly earnings report, I thought why not dig into it a little bit, give some of my thoughts, and encourage you to go ahead and read the quarterly earnings report yourself. Look at these statements, make sense of them, understand what all these things mean, right? Look up definitions. I really think that's important. If you're going to invest in a company, you want to know what you're investing in. And of course, none of this is financial advice. Just my personal thoughts and opinions. Go do your own due diligence. Never ever trust anybody blindly, not even me. Right, so first we're going to talk about cash. So cash and cash equivalents. If you look at the same quarter of the previous year, it was about 1.7 billion in cash GameStop had at that moment in time. However, now they only have 908 million, right? So they've been burning a lot of cash. But I was aware that this would happen. I think a lot of people are aware this would happen because GameStop said, hey, we're focusing on top line revenue, innovating the brand, developing new avenues of growth, right? Things of that nature. So we've seen them slowly burn through cash, but they kind of slowed down their cash burn because from quarter two of 2021 to quarter four, they burned like over 500, a little over 500 million or about 500 million here, right? And then from quarter four of 2021 to quarter two of 2022, only about 300 million. Yes, still burning lots of cash, but look, in that time, they also got a lot more inventory, right? So we have more inventory than last year after going through a holiday season. Yes, we have less inventory than the holiday season, but I think that's because GameStop loaded up on inventory around the time of the holiday season because they wanted to have plenty of it. And now that we're seeing the supply chains continue to have issues, right? They still have this inventory on hand. Yes, now there's less inventory, but okay, well, they bought the inventory before maybe the cost of goods would go up, before the supply chain issues would get worse, right? So I think that's kind of why inventory went down now, is because they had bought it prior to things getting worse, right? Again, just my thought, and my thought goes further on that when I look at accounts payable, right? Because now accounts payable is actually lower this quarter, right? Compared to the same quarter last year or the quarter four, right? And if you go to accounts payable definition, accounts payable are amounts due to vendors or suppliers for goods or services that were received but not yet paid for. Okay, is that maybe like GameStop has less purchase orders from its suppliers right now because they had bought it at a time where maybe prices were a little bit better on some of these items they're buying from suppliers, right? Just my speculation here. Examples of accounts payable expenses may include, but are not limited to, things like transportation, logistics, raw materials, products and equipment, licensing, leasing, right? So again, just speculation based upon this. Go do your own due diligence, create your own thoughts. I'm just giving you what I think. And then something I love to keep an eye on is the long-term debt. Stays very consistently low for GameStop. This long-term debt right here is just one simple, or I think it's a combination of three, but they're all with the French government. Yeah, really simple loans from the French government, really, really low interest. I'm pretty sure it's literally 1 or 2% on each of these loans. So the cash to long-term debt is just phenomenal. And if you look at the balance sheet as a whole, my personal thought is it's an iron balance sheet. It's in great shape. Now all GameStop has to do is turn profitable, and I'm going to be making another video on that. You should definitely check it out, and have a great day.